Trade alert, we got lucky, an extra $500 of income to collect today. We've collected another $500 in addition to the $1,862 collected yesterday, which I'm going to use to rebalance my cryptocurrency portfolio soon. To sum it up, the stock market went up a lot yesterday, and this is going to allow us to have multiple paydays in a single week. This won't happen every week, but when it does, I always like to say, make hay while the sun is shining. The trade alert for today is later on in the video after we do a quick update on our cryptocurrency positions. The cryptocurrency portion of the model portfolio is currently down negative 38% and is in dire need of additional capital. Its target position is 10%, but it's now down to 6.57%. I'll need to add approximately $8,270 to get my portfolio back to balanced, and this is based on a $250,000 portfolio. And if you look at the purple, green, yellow, and red below, we can see what my target stock percentage is versus my actual stock percentage, which is indicating that I'm overweight in stocks by $6,875, which should be reallocated to cryptocurrencies. Now, I'm not making that move today, but I do intend to do it before January 15th of 2019. I'm a little heavy in cash. This portfolio is designed to have a rainy day fund at all times, which is the 10% of the assets. It has a target position of 10% for gold using the GLD ETF. Currently overweight in that position by $968, and then you can see I'm light in my cryptocurrency portfolio by $8,270. Now this portfolio is based on a $250,000 total deposit. Let's talk real quick about which assets are designed to do what for the investor in retirement. 70% of my capital targets holding stocks, which I can use to generate consistent weekly income as a loan shark to Wall Street gamblers. And more on that in a little bit. 10% holds gold, following the moves being made by central bankers loading up on gold right now. This is the single safest and most prudent method to protect against inflation. 10% targets holding cryptocurrency to give my portfolio the opportunity for exponential growth and a more aggressive inflation hedge. Banks are also aggressively investing heavily in this sector at these depressed prices, making this investment look better and better. 10% is in cash to be maintained at all times as an emergency rainy day fund. All too many of you don't incorporate this into your portfolio, and it's absolutely critical when you're nearing or already in retirement. I'm going to wait a few weeks to add funds to my cryptocurrency assets. I think there's a small chance we might be able to load up on Bitcoin in a $2,500 to $3,000 range. And this is namely because I believe that potentially Bitmain could be in financial trouble and may have to sell some Bitcoin and Bitcoin Cash. I'm concerned that there may be more miner panic selling as the price continues to trade at this range. And on top of that, all the ICOs from last year might start running out of capital in the next 12 months, and this could also cause some liquidations. So maybe we drop a little bit lower. We might just have enough rich people fighting over Bitcoin in this $3,000 to $4,000 range. I'm going to wait until up to January 15th to try to load up on Bitcoin at that range. So if there's no more downside by January 15th, I'll rebalance regardless. Here's what I predict happens next. The super rich who've spent hundreds of millions supporting Bitcoin's decline are going to reverse the market cycle and make their investment turn an ROI over the next few years. Now, I was expecting Bitcoin to actually reverse back in October and to have a rally through November and December. So far, that's not happened, and in fact, the opposite has happened. But the trading volume is spiking. It's clearly being bought up in the masses. So I do expect this trend to reverse in the near future. So to reiterate, expect to see my portfolio buy more Bitcoin before January 15th, 2019, then diversify those funds into altcoins following the aggressive portfolio builder settings with the goal of capturing a multi-year cryptocurrency market cycle and adding serious growth to our total portfolio. In the meantime, I'm going to keep pulling a 0.5 to 1% return on investment on my working capital available in my stock portfolio as frequently as possible to generate the capital I need to rebalance my cryptocurrency position as well as generate retirement income. Here is today's stock alert. This is for December 11th, 2018. If you're not on the email newsletter where you get these alerts the second they go out, click on the left-hand corner and sign up right now for a free 30-day trial. Double payday this week on the SPY ETF, collecting $500 more today. Our stock income strategy is in the business of being a loan shark to retail investors wanting to bet on the short-term movement of equities. If you've ever tried to do that in the past, you would know it's totally a guessing game, most similar to the roulette table at the casino, which has no shortage of avid gamblers willing to take a spin and try their luck. While we can make a steady 0.5% to 1% a week loaning money to Wall Street gamblers, they're trying to double, triple, or even quadruple their money in a week, betting on short-term moves on ETFs like the SPY. This week, not only did we get lucky with a double payday, our gambler also got lucky. Whoever we sold our SPY call option to yesterday doubled his $312 investment intraday. We did well also, earning a 0.86% return on $75,000, actually closer to $50,000, with a $312 profit from our capital utilized in a single day from selling the 2 call option contracts. Plus, we made an extra $100 profit by writing the covered call at $262.50 when the SPY was trading at $261.50. Here's the trade from yesterday so you can look it over again. So in total, we took in approximately $624 of option premium from selling 2 contracts against our 200 shares of SPY. We had another 76 or so SPY shares which just appreciated. And yesterday, when the gambler who bought this contract from us got lucky, exercised it, he was able to buy our shares at $262.50 and then immediately resell them for a profit. Now, to give you an idea of just how profitable it can be to make these small gains consistently, there's 252 trading days in a year, and this utilized $75,000 of capital. If you compound the profits and generated a 1.15% return on every trading day, it grows to $1,259,000 in a single year. Now, I don't expect to get this type of return most days, much less most weeks combined, but it gives you an idea of how fast you can grow your portfolio, making consistent short-term profits. So here's what the SPY did yesterday to make both parties turn a profit. And you can see the underlying ETF went up considerably to close the day well above the strike price. We sold our 2 SPY contracts. Now, if the market had gone flat or down, the gambler would have completely lost, and while we'd get to keep his money, we would also have to hold on to the underlying asset, which may have lost more value than we collected. Which is why it's critically important to use this strategy on extremely safe, long-term, and diversified portfolio of stocks that we're confident will go up over time. So my favorite way to do this with the least work is using country ETFs, which buys big shares and allocations in the most profitable companies across the globe. Currently, this portfolio allocation is designed by each country's GDP, giving us a 30% position in the United States ETF SPY, 7.5 in Japan, 5 in Germany, 4 in the UK, 3 in Brazil, 18 in China, 4 in India, and a target of flat 10 in gold and 10 in cash. Update and trade alerts. These were issued at 7:49 Eastern AM. You may be watching this video later, but at least you can see how our strategy operates. And again, if you click in the left-hand corner and sign up for the free trial, you'll get these alerts in a timely fashion via email. Here's what the SPY ETF did this morning. I begin writing the update way before the market opens, and then can just add this into the end of our update. You can see the SPY jumped up much higher, so most likely what would have happened is that either this morning or yesterday in our model portfolio, the option buyer we sold a SPY call option contract to will exercise his right to purchase our 200 shares of the SPY ETF at the agreed strike price of $262.50 plus around $3.20 a share premium, which we collected selling the contract. Now, when we made that deal, the SPY was trading at $261.50 yesterday morning. So we made out very well. But now we have our $50,000 approximately of capital and cash to put back to work. And again, that's from 200 shares of SPY ETF, which we had to sell for a profit, and leaves us with only 74 shares of the SPY still in our account. Those 74 shares just went from $261.91 when we purchased them up to $267.50 this morning for a profit of $413 on top of the profits we just discussed from writing the covered calls yesterday. To get back into the SPY position, we'll do the opposite of yesterday's trade and write an in-the-money put option aimed at delivering us 200 shares of SPY at a discount. So here's today's trade alert. We're collecting around $269 per option contract, so multiply that by 2, and are agreeing to purchase shares of the SPY ETF at $267.50, and it's currently trading a little bit below that, $267.34. So take the difference of that against the premium, and that's our discount we get to enter into this trade at the current market price. So most likely, if the SPY drops a little bit today, we will get filled and then be ready to enter into a covered call tomorrow. Now, the buyer of the put option most likely wants to see the SPY dip below 265 in the next 48 hours in order for him to want to exercise his rights. If it doesn't drop below 265, we will have used $53,500 worth of capital to generate $500, a 0.009% return over the next 4 days, and we'll do a similar trade next Monday until eventually we do get assigned to purchase the 200 shares of SPY that we desire to have in our portfolio. Tomorrow I will have this updated, but it gives you a look at how close other covered calls we wrote are to being exercised, which means we may have even more profit-taking opportunities this week. So we can see each of the open covered call positions as of yesterday. And if the ETF current price minus the option price start becomes greater than the strike price, that's when most likely you can expect your covered call to be assigned. So that certainly happened in our SPY position, but now the India ETF and the MCHI Chinese ETF are getting closer and closer to that also occurring. So that's the end of today's update. Look for a new video and email alert tomorrow.